Gopal Srinivasan joins us. He represents TVS Capital Funds, and then Vikas Khemani will also be joining us in moments from now. Gopal, good morning. Good to have you on ET Now. Let me first extend season's greetings from everyone from ET Now. Wish you and your family a wonderful 2022 ahead.
Thank you very much. Thank you. Same
Gopal,
to all of you, all the listeners.
Thank you. Gopal, when you see a crack of about 50 to 60% in the so-called new internet or global tech companies, it makes you wonder, was there a bubble which has got pricked, or this is just volatility?
I think when you're living at a time when you had nearly 2 years of COVID, and you've had a glut of liquidity that humanity has not seen before since the pralaya of the past fables, you are going to see extraordinarily difficult things, right? So I don't think we should overreact to this massive levels of changes that we might be seeing. I always chuckle to myself when I realized that if Facebook had listed at 60 times rather than the 20 times where it listed, you would have halved your returns, right? So clearly we have seen some extraordinarily high priced issues. But over time, if you really believe in these companies, like I believe, for example, that Fresh or Nykaa are great companies, in a 5-10 year time, would you still not do well? I think that's a question I keep asking myself.
What are the lessons to be learned from PayTM?
I don't follow PayTM, so can't really speak about that company very much. So I think it's doing so many different things that I'm not even very clear in my mind what is their exact core business. So not able to honestly comment on PayTM.
Is there a categorization, do you think, which will emerge now within the entire internet companies or the new tech companies or the SaaS companies in 2022? Like you said, that it's been a rising tide phenomenon where everything has gone up. But do you think in 2022 the differentiation will start?
We are a private equity 10-year investor, right? So from that point of view, honestly, the way we look at the market right now is all these digital companies or SaaS companies, whether they be software companies, whether they are banking tech companies, whether they're payment companies, or other the credit infrastructure companies, are just in their infancy. So my suggestion to investors who are thinking 10 years is to find, as always, companies which have phenomenal market or ceilings which are unbreached, and great founders, and go after them. I think it's just the beginning. In my mind, we are in some sense not even 10 years old or 15 years old. We're teenagers at best in this market, right? So I think we should be looking at great companies where the address available market is massive and founders are phenomenal, or a founder is phenomenal. There's a study out yesterday which points out that single founder companies tend to overachieve compared to multi-founder companies. So you hear all these little studies that keep coming every week. But back great founders in this space. I think digital is the place to invest. Our fund has completely segued practically, with the few exceptions, to about 2/3 of our portfolio now going in the future to digital investments.
Last time that if India has to add $2 trillion in next couple of years, $1 trillion will come from the so-called internet and the entire IT space. I'm excited to know. I'm excited to know more about it.
Of 2 trillion GDP, I'm thinking of the next 7 trillion GDP, right? At 2040, India at 100, it's a 10 trillion economy. I think we should work back mileposts and guideposts, working back from that. Try to imagine where we will be in India at 100 and then make those investments. And that's exactly how we are going about it at TVS Capital. Nikunj?
Okay, so coming back to the 2022 point, Gopal, what do you think would be the big trend? Because in 2021, we've seen really a rush of liquidity, birth of about 3 dozen unicorns, and 4 or 5 big, reasonably large size companies have gone public. What to your mind is going to be the trend defining moment for 2022?
Like I said, we are thinking always 5 to 10 years. So the way we look at, I mean, obviously this IPO trend is fabulous. I think the fact that India has got the liquidity and depth to price these mega IPOs, and there are still a few more to come, right? I think the valuation of the recent tech IPOs itself is north of 3.5 lakh crore, and maybe there's another lakh or two to come in the market. So that trend will obviously continue. The IPO market is not going to stop. Yeah, inflation is high, but growth, real growth everywhere is catching up, right? Even in the US, after a long time, auto industry started hitting 9 million annualized run rate in terms of car production. Chip shortages are showing early signs of easing. So there is real growth in the world. Let us not just get carried away only by 1 point measurement of a wholesale price index. I mean, we seem to measure WPI when it goes high, and if CPI goes high, we talk about CPI. So I'm just saying that there is real growth in the market. That is first. Second trend that I see is where we invest in financial services and logistics and supply chain. There is a massive opportunity in the area of the unserved market, right? If you look at the entire MSME market in India, nearly what I think there must be the number of MSME companies are 65 million is what people say. So nearly of the credit that they take, more than half the credit that these MSME 40% of the credit that they consume is actually coming from the informal sector. So we are really thinking that all the digital plumbing that India has done, whether it is UPI, Open, whether it is account aggregator, RBI setting up a lot of digital initiatives like the RBI Innovation Hub, all these are going to bear fruit. We should be looking at companies that are enhancing their digital lending channels substantially. We think, for example, that digital lending to SMEs alone will go to 6 to 7 lakh crores, right? So from that point of view, if you look at the total credit to MSMEs, about 45 lakh crore, nearly 15-20% will come from digital channels. So who are going to be the companies to invest in to provide that kind of credit to digital channel credit to MSMEs? Is it co-lending companies like Cred Avenues or Flexi Loans or Ugro, who have established co-lending partnerships between banks and NBFCs and acting as a switch? Would it be people who are doing trade financing, stroke supply chain financing, and trying to automate the entire supply chain financing process, which is badly stuck in India? Would it be the taking a different lens? People look at bonds. For example, in India, Nikunj, I don't know whether you track this, but if you look at bonds in India, right, out of 7.5 lakh crore bonds, which are the bond market in India annually, not even 5% is less than A minus, which means that all the underserved markets, whether it's consumer or importantly MSME or agri at least is government backed, are not getting any exposure, any opportunity to get fair pricing for credit and fair access to credit. So I would say the thing to do is to spend time, if you're thinking 10 years, in things like MSME financing. Or in India, today 80% of the households are still living on monthly household income of less than 15-20,000 rupees. So the opportunity for sachet credit, sachet insurance through digital means, now that the feature phones are being replaced by smartphones and 5G is not that far away, I think those are the opportunities. Go after the demographic dividend of India, where credit and financial services is underserved, be it MSME, like our five-star finance in Chennai giving 2 lakh, 3 lakh loans to millions and millions of kirana shop or lakhs and lakhs of kirana shops and restaurants and malawalas. I think that is where I see the opportunity. So our mind is actually very focused on the demographic side of India, which is now accessible thanks to the fantastic job the government has done on digital public infrastructure.
Good morning, Mr. Srinivasan. Since you're talking about the work that the government has done, it brings me to the question of your meeting on Friday with the Prime Minister. He did start off his meetings before the union budget with the startup universe, meeting investors like yourselves. I don't expect you to tell us what happened in that meeting, but what would be the big ask from the industry?
So the industry, I think, is looking at it from two aspects, right? There is the foreign investors and the Indian investors. They converge on many items, and they don't converge on some. So the main ask from the domestic investors is investors who take risks like us, who put money into 7-10 year horizons into Series B, Series C investments or Series A investments. Our clients, our LPs are taxed at double the rate an investor in the public market is taxed for long-term capital gains. This seems to be rather odd, right? That somebody can actually get a 10% LTCG rate by investing in public market and effectively pay something like a 28% or 20%, at least 20% tax rate after indexation for investing in startups. Why? I think that was one big conversation, that basically the tax structure is not aligned with the risk structure, the development structure of India. That was a big conversation. The second conversation was around whether Indian tech companies are now able to list in India, and should they necessarily be forced to flip as they were doing, and what can we do to make them list in India and stay in India. There were different solutions talked about in that area. The third important solution I must speak about this is, you must have been seeing that agri-tech has been attracting nearly $500 million last year of investment, is what is the rough numbers that are coming in, right? And if you look at the entire farmer credit in India, it's only 18 lakh crore, and that too largely driven by government enforced programs. So can we create the fund of funds for agri-tech, where NABARD, for example, which is really a dynamic organization in the government sector, can run a fund of funds just like SIDBI is running for startups, maybe a 5,000 crore fund of funds, and VCs who take money from them commit to put 2 to 3 times that amount into agri-tech. That could be a very, very important ask, and that was also very much liked by the Prime Minister. A couple of us suggested an agri-tech fund of funds. So I would say those three things went well from the industry side. And of course, the PM with his long-range vision had many thoughts.
Okay, so let's see if agri-tech turns out to be the hottest sector in 2021. A lot has been said that this year it didn't get the kind of capital it should have. Now, Mr. Srinivasan, if I can ask you one question. I know for all of you investors, all your portfolio companies are equally special, and they're like all children that you love equally. But if you were to look at your previous investments, Nykaa, boy, what kind of return on capital that must have given you. Yes, you might have exited in 2018, but look at the IPO now. IEX, that was another find of TVS Capital. If I were to ask you within your portfolio, what could be the next Nykaa? What could be the next IEX?
Of course, our short answer will be all of them. But but it's too early to call. But I would say the digital companies are the ones, right? For example, we recently invested in a company called Cred Avenue. So these are the ones with uncapped returns. I think the other companies, for example, like say GoDigit, the insurance company, again, a lot of digital investments is being done by Kamesh. So wherever there is a digital component is very high, there is hyperscalability. And those are the areas I think I would expect to see breakout returns. The others are excellent returns, don't get me wrong. We're very pleased with our investment in 5-Star as a company or Leap as a company. But these are predictable cash flow yield type of returns, right? Unlike uncapped returns that you're seeing from, let's say, a GoDigit or a Cred Avenue in Chennai. So these currently, and there are 2 more shortly to be announced next month, which will also again be the digital space, so 3 more. But our investment is very simple. We are chasing simply the idea where digital and demographic dividend of India come together. So where does digital companies using India's public digital infrastructure or otherwise go and serve the mass of India, that 80% of the households which have less than 20,000 rupees a month per household income, 60% has got even less than that, right? 6,000 or so per month. So those markets, the MSME market, the agri market, how are those markets getting access to credit, to insurance? And that is where we are spending a large chunk of our time in addition to logistics.
Okay, so let's see how all of this pans out. Mr. Srinivasan, thank you so much for joining us live today on the market. In case we don't speak again, here's wishing you and the entire team a very happy new year.
Viewers, thank you. Happy New Year.